Welcome to episode 2 of CommonCentsPod, where we are documenting our journey as two first-generation Nigerian-American millennials trying to figure out financially, and hopefully we can all learn a thing or two as we embark on this journey and share our experiences. I'm your host, Dami, and this is my co-host, Umar. What's up, bro?
Doing well. Had a good week so far. Nothing too crazy. Work is going well. I'm excited for episode 2. How about yourself? How are you doing?
Yeah, man, I'm chilling. No, I had a good weekend. We all went to dinner with my brother this weekend. It's been a good work week thus far. But yeah, episode 2, one more episode, and then we're real podcasters.
Officially podcasters. What do you
Facts.
say about the 99% thing?
Yeah, I think it's like 90 or 99% of podcasts don't make it to their third episode. So once we post our third, we're in the top 1%.
All right, bet. We have one more. Don't worry. We're here for a long term anyway, so it don't matter.
Yeah, long time, not a
But
good time.
no, for
Or
sure.
both.
But I saw Afrotech was in Houston this weekend. How was that?
Yeah, it was cool. I mean, I didn't really partake in it this year because last year was a lot and I just had some stuff going on. But like, they was outside. If you were looking for anybody in Houston this weekend, they were outside.
Nah, they're outside for sure. Like I saw a bunch of videos, a bunch of pictures. I thought this was supposed to be a tech convention. I see people outside.
No, yeah, they some people didn't add tech to their weekend, so it was just
It
Afro.
was just Afro.
Some people were just Afro. There was no tech. Yeah.
No, but I mean, I heard good things about it for sure. I mean, it really just depends on what you're looking for. I think the people that went there just to network, to go to those tech those tech events, those meetups, I think I heard good feedback about that. I mean, if you're just there for the social, you also saw that. But why is common sense not there? We should have been out there for sure.
Nah, definitely. I feel like, for me at least, I had some stuff going on, and you were out the country. But next year we'll be there. We'll be there for sure. Next year, Common Sense will be at Afrotech.
I think that's a great goal for us to set for ourselves. I mean, we have a year to the next one, so just being able to show consistency when it comes to speaking finance from our perspective, growing this community, and hopefully, I mean, we're gonna not hopefully, but we're gonna be out there some way somehow speaking common sense at Afrotech next year. Just book
For
it.
sure,
So
for
we
sure.
have some work to do for sure.
We got some work to do, and as we grow our community, that will be our first meetup. So we can plan our first meetup is going to be Afrotech next year for
The first,
the people of our
he
community.
said it. Okay, he said it. All right, now
So
we just gotta
have 1 year till our first meetup.
Now we just gotta plan accordingly and make it happen.
Bet. Cool. So we're here to talk about investing today, specifically investing for beginners. So I'll start by asking you, what is your definition of investing, or what does investing mean to you?
Investing in the financial sense really is putting money into an asset, into a stock, hoping for it to grow over time, plain and simple. That's how I see it. So you're buying a particular stock at this price and you're hoping for it to grow in the next year, the next 2 years, next 5 years, next 10 years, because honestly, investing is for the long term. But really that's how I see it. That's plain and simple to me. How about yourself?
I see investing as basically purchasing or obtaining anything with the hopes that it'll increase in value over time. I guess we're talking financials in the stock market. So any asset that you get or that you buy and you assume or hope that it will increase in value over a period of time.
I mean, like, it could be valuables as well, right? So valuables like watches, bags, stuff like that. But we're just focused on the stock market.
Yep.
No, I think about investing the same way as just anything you put time and effort into. So let's say you put effort into going to the gym, you put effort into dressing nice. Those are the things you're invested in. And hopefully for this conversation, we just want people to be more invested in the stock market and investing.
Yep. That's the goal.
So now, why should people invest? What is the main reason would you say people should be investing today?
Yeah. So basically, investing, as we said, is the goal of investing is to for gains or to increase the value of something you own. So investing allows you to put all your money in one place and for it to increase in value. It is increasing in value through shares of companies or whatever asset you buy, but it allows you to put it into one place for it to grow over a long period of time. That'll help in pursuing of the journey of financial freedom, is which we're all trying to work towards. We all don't want to work till we die. We want to have some type of freedom with our money to spend the money with the way we want, not to not have to feel like we got to go to work every day. So you invest in the stock market to get to your journey of financial freedom, and you invest in the stock market to build long-term wealth. And those are basically the same journey.
Yeah.
What would
No,
you
yeah,
say
I
there?
agree. I agree for sure. So, I mean, like you said, it's for building that long-term wealth. And honestly, it's really just for comfort. So today, people pretty much live from paycheck to paycheck, and you don't want that to be your reality moving forward, like even into retirement. So the reason why you should invest today is that you're putting that effort into investing today, so you have that comfort, flexibility to do the things you want later on in life. You don't want to be stuck to just managing your paycheck from paycheck without any type of retirement, any type of investment to fall back on. And I think that just gives you some type of comfort knowing that you have that if you start investing early. Another reason why people should be investing is because of inflation. So inflation normally increases 2 to 3% each year, but as of recent, we've seen that inflation is increasing more than normal. Pretty much what inflation is that the value of your money is reducing over time. So take, for example, if you had $100 last year and inflation is 3%. So that means your buying power this year is only $97. So you're losing that value from money you're not doing anything with. And that's where investing comes into play. If you're investing and you're getting returns over the inflation rate, let's say 5-10%, you're pretty much beating inflation. So we've got to a point where investing is not even like it's not it's not a necessity. It's not just because you feel like investing.
Optional.
It's not optional. Exactly. Investing is not optional. It's more of like a necessity where you have to do this or you're going to lose your money to inflation. And so who wants to be losing money? Even if you're who wants to be losing their money? So the smart thing to do with your money is to invest it where you can beat the inflation rate that we have today.
That's really valid. That's a really valid point you made there, because as you were saying it, I kind of thought, and it's like it's almost like the second you receive money is less than what it was when it was given to you because of
Exactly.
inflation.
Exactly.
Like it's already
Hmm.
it's already worth less just receiving it, and then you pay taxes on it, and then it's worth even less. So, no, that's
Yeah.
really
So why
valid.
not put that into something that's gonna grow?
I agree. For the person that's listening and they have never invested or trying to figure it out, when should they invest?
Honestly, as soon as possible. So if you're just watching this episode right now, after this episode, try and figure out a way how you can start investing. Because one thing about investing early, you have the power of compounding. So compounding is where the money you invest makes money and that new return starts making money. So it becomes a snowball effect. It's pretty much like the if wonder of the world where you invest into something today and over time it starts increasing because you have that compounding effect of your first investment. So that's one of the reasons why you should start investing early. I would say for people that want to start investing, once you have your essentials paid for, so like your rent, your car payment, your bills, that extra money that you have, that's really what should be going into your investments, because that's that extra capital that if you don't use properly, is going to be used in things that you shouldn't be spending on. So why not just spend it on investments and trying to make your future a lot better for yourself? How about you? When should people start investing?
So pretty much like you said, is as soon as possible. They say the best time to buy real estate is yesterday and the next best time is today. I would say the same thing for
Today.
investing. You'd probably just want to invest now. There's two thoughts on when you should invest, two schools of thought, on which one side says that you should pay off all your debt. And when you pay off all your debt, you'll have more available money to put into investing. And that's when you should invest. I agree with the second school of thought where they say you can pay off your debt and invest at the same time. Like,
Mm-hmm.
I think you should probably pay off your high interest debt. Like, if you have some really crazy high interest debt, you should probably pay that off first. But once you're just paying regular debt, like student loans, some other things that may not have too much of a high interest percentage on them, I think you should be investing at the same time, because the gains you can make in the stock market can and probably will, if you do it well, and outweigh the interest being charged on the credit cards. The S&P 500, which is the 500 best companies, averages about 10%, like 10.3 or 4% every year. So on some years, you're going to get 20 something percent. On some years, you're going to get 5%. I
Yeah.
get 3% another year, but like over periods of time, that money is going to accumulate. So the sooner, the better.
And that's why we say investing for the long term. But I feel like anyone watching this, their next question would be, what should they invest in if someone that has no idea of things that they can invest in? What would your advice be to them?
So what should you invest in or what can you invest in? It kind of depends on you and how you want your investment portfolio to look like. So we have a few different options that the average person can invest in. I'll start from, I guess, in terms of like volatility or safety, quote unquote. So you can invest in bonds. Bonds don't move too much. They're pretty safe. The US kind of runs off of bonds. Do your own research. I don't know what I'm saying. Then we have like ETFs, mutual funds. You can invest in those. Those are relatively safe because they're not as volatile as individual stocks. So it's a group of stocks. And then you can invest in stocks. Not all stocks are volatile, but there are some stocks that are super volatile and there are some that are not as volatile. And then there's crypto. You can invest in cryptocurrencies, which are a lot more volatile than stocks, ETFs, and bonds. But for the people who are invested in crypto, they do see high returns compared to like stocks and other things, but they're also high or very strong drawdowns, which everyone cannot tolerate or everyone can't stomach that. So those are
Yeah,
things you can
a lot of
invest
people
in. It's
have.
kind of based on, it's based on your own investment strategy and how you would like to build a portfolio.
But yeah, I think you definitely mentioned like those assets that you can invest in the stock market, going from that volatility, from that risk tolerance level, from bonds to ETFs to stocks to crypto. I'll say the main three that I encourage beginners to look at, especially when starting off investing. So starting off from individual stocks. So stocks is basically having some type of ownership in a company. So even if you have one stock, you have some type of ownership. One thing I like telling people is that think about your everyday life and the things that you use and the products that you use. So for example, Apple, your iPhone, your iPhone is made by Apple, but you invest thousands of dollars every year, every 2 years to get the newest iPhone. But are you invested in the stock? So if you have $1,000 iPhone, you should have $1,000 worth of Apple stocks. That's just how I see it. And I tell people that. Another thing would be Instagram and Facebook. The parent company is Meta. Are you invested in this? This is a product that you use every day. People every hour, every minute. Are you invested in this? Like,
Yep.
so those are the
Yep.
things that I tell people when you want to start investing, look at your everyday life and what are these products that you use. Another safe investment that I encourage people to look into are ETFs. Pretty much ETFs are a basket, a collection of stocks within a specific sector. Let's take the QQQ for example. So this is an ETF specifically for technology stocks. Pretty much why you want to invest in ETFs is because it protects you from the volatility of individual stocks. It's a lot safer. So even though you might not see the returns from investing in, let's say, an Nvidia or Microsoft, you do get that average rate of return between all of those stocks in that sector. Because let's say these stocks do go down maybe 20%, you won't feel that as much having an ETF. And the last one that I would say once you have some type of experience to start looking into is crypto. Yes, it is an extremely volatile asset, but the return cannot be denied. Like Bitcoin cannot be denied. Bitcoin has grown astronomically over the past couple of years. So if you invest in some type of money, you would have seen return.
We just saw Bitcoin under 100K.
Only under 100K. Yeah. I mean, if honestly, that's an opportunity for people to buy because people were waiting for it to get under 100K. And so if you saw that, if you believe in it and saw that as opportunity, you would have bought at that point in time. But pretty much
Yep.
my caveat is that you only want to use 10% of your portfolio in crypto because you also want to protect yourself. You want to have some type of risk tolerance when it comes to investing because it is a risky asset.
Yep. Whether it be 10%, 5%, 20%, I wouldn't advise more than half of your portfolio being crypto.
Those are pretty much the assets that I recommend to investors starting off. Stocks, individual stocks, ETFs, and crypto when you have the portfolio that can support it. What are the types of investors that invest in these assets and what can you say about the different types of investors in general?
So we have short-term investors and long-term investors. Starting with the short-term, and we'll probably need to do another episode on trading at a different point since we're talking investing
For
today.
sure, for sure.
But short-term investing in the stock market includes buying of shares at low prices and selling at high prices, or selling short, which is the opposite. And it's not considered investing because it's trading, but like traders, different type of traders. So our day traders, scalpers, people that do swings, people that do leaps. Well, technically leaps is long term, but like there are different categories of traders who look for movement within stocks and trade that movement. So they don't care about the value of the stock itself. They don't really care about the fundamentals or anything. They're just looking for movement, and they're buying options contracts to take advantage of that price action on the stock, whether it be up or whether it be down. It doesn't really
Mm-hmm.
matter. The more
Yeah.
price action, the more movement they can get on the stock, the better it is for their trade. And then for our long-term traders, long-term investors, sorry, we have simply the buy and hold, or people that do like buy and hold of stocks for a long period of time. So
Mm-hmm.
it's usually going to be people that buy into companies that they believe in, or companies that run the world or run the US. You buy a Microsoft long term, you buy a Meta long term, you buy Apple long term, you're bound to see great returns. And those are the type of companies that you want to put into your buy and hold portfolio. Just buy them for the long term, because the rate at which they're growing and the success that they're doing within the US specifically, we're talking about our market, they can never fail, and they will continue growing as long as the US continues growing, which means that buying them, you're just putting money into something that's just going to run up. So that's what I would say about like the types of investors, the short and the long term. But like I said, we probably have to talk about trading on its own another day, because of, trading is it's a lot.
It is a bit complicated, but I mean, you pretty much, yeah, you pretty much described it properly. Where you do have mainly two types of investors: people that buy and hold for the long term, and really like, and this is why I encourage for beginners, especially. This is what we talked about. Investing is for the long term. You're not looking to just get a return in a day, in a month. You're looking for years and years of returns. And that's why for beginners, we definitely encourage you to start looking at buying the buy and hold strategy. Be that type of investor starting off. And then once you get some type of experience, some type of knowledge into the market, then you can start looking at the short term investing. So like you mentioned, the options trading, the day trading, these is where you don't necessarily believe in the, like you said, the price of the stock. Is more of using price action to make some type of profit. And that's really, so that's, I would say that's the main types of investors. But since we already mentioned trading, I think it will be good to kind of explain what the difference between investing and trading, because I know people get that mixed up. So what would you say the difference between those two are?
Yeah, just to touch on that, not to make it too much of a topic there. Investing, like you said, is buying for the long term. When you're investing in something, you want it to grow over a period of time. And when you invest and buy something for a long term, you're eliminating a lot of your risk. You're eliminating a lot of the
The
harm
short
that
term risk.
could
Yeah.
the short term risk that could happen within it, because you're buying for the long period of time. Like I mentioned earlier, the S&P is up 10% on average every year, and a lot of that 10% is pushed by technology stocks. There are some technology stocks that go up 20% per year, that go up. They might have a 30% year. We've seen technology stocks that do more than that in a year. So like if you're invested in that
100%.
company, your money could go up 100% per year, depending on the year and the stock that you're invested in. So that's the long-term effect of it. That's the long-term definition. That's why investing is for the long term. But trading, on the
Mhm.
other hand, is a lot more short-term, particularly depending on what type of trading you're doing. So like I mentioned earlier, like traders are not looking for value in an asset. Traders are looking to just capitalize on the movement, on the price action of a stock. So with investing, you're buying stocks themselves. With trading, you're holding on to contracts, and these contracts represent 100 stocks. I don't want to get that deep into it, but like the contracts
Into the
move up
options.
and
Yeah.
down
Mhm.
based on, yeah, they move up and down based on the price of the stock, or the how well the stock is moving that day. So that's where traders make their money. I will say trading is definitely a more complicated skill than investing in itself. So like it's not something you should just hop into if you don't have the knowledge, if you don't have the experience. Investing, you can get lucky investing and not knowing what you're doing, if we're being honest.
Mhm.
Trading,
Mhm.
you can be skilled and still be losing. And it's something that requires a lot of attention and requires strategy. So definitely build your strategy and work on it before you start actively trading if you're not knowledgeable on this.
No, yeah, I agree with you, everything you said there. I think the main difference to me is that there's that time difference. Investing is more of that long-term game, and then trading is a more short term in terms of getting profits. I like to say trading is for seasoned investors. So people that have been investing long term and looking to get into some type of new strategy to get better returns as well. The next step in this, how would someone start investing? Now you know what the different types of investments are, what kind of investment strategy you want to apply. What are the
Mhm.
steps after I know all of this?
So the next thing would be, in my opinion, before you even try to invest, is to do your research on, like we
Hmm.
kind of talked about already, but do your research on what type of investor you want to be, how you would like to invest, get an understanding of how the stock market moves, and et cetera, et cetera. And you can download a brokerage. There's a lot of different brokerages, so I wouldn't say there's one that's better than all the rest. They all have their own pros and cons, but most beginners tend to download Robinhood as their first brokerage. It was my first
Yeah.
brokerage. It was most people's first brokerage. Uh,
Yeah, that was
but you
definitely my
don't,
first brokerage too.
yeah, exactly. But you don't have to use Robinhood. There's Thinkorswim, there's Webull, there's Coinbase, there's Kraken for crypto, TD,
Fidelity.
Ameritrade, Fidelity, IBKR. There's so many different brokerages and they all
Okay,
offer
okay.
their
We
pros and
know, we know
cons.
you know brokerages.
They have different pros and cons. So it's whatever one you want to use.
Hmm.
But once you download a brokerage, you start putting money into the market. And I would say in order to make your investing journey efficient and make it a easier one, I would say if you're planning to put $100 into the market the first time, put them instead rather than just putting money into it one time, look for an amount that you feel comfortable with putting in at a certain frequency, whether it be every 2 weeks or whether every month. Look for that amount and put that rather than making that initial first deposit. Like I said, if it's only $10 you can put up every week or every 2 weeks, just do the $10 instead because you want investing to be as seamless as possible. You want to make
Hmm.
it such a process that you don't think about it. It just happens automatically. So when you're having those automatic deductions and you're using like as soon as the $10 goes into your account, you're buying Bitcoin or you're buying whatever, you won't think of it. It'll just be like a regular bill. And that's how you grow your wealth and you won't even feel it. It won't even have an impact on your life. But
Yeah.
I would say as soon as you're able to do that, that's when it becomes easy and you're investing. When you want to pick up from there.
Yeah, for sure. I like how you said that make investing feel like a bill because that's 100% accurate. Like the same way you have automatic payments on your bills, that should be the same way you're putting money in your brokerage account.
Yep.
Like you said, it makes it a lot more seamless. But I'll say after that, really just do your research. And then once you find those stocks that you want to invest in, keep your portfolio small. So don't start off, oh, you want to buy all the stock. You saw this person talk about the stock. Now you want to buy it. You want to buy 10 stocks at a time. No, because then it becomes too hard to manage. I feel like the best way is to have a small size portfolio. That way you can kind of track how each of those assets are performing. My key thing is have two ETFs that you start off with and then have three stocks. So that way starting off, you have five assets that you're managing over time. And as you see fit, you can add to that or you can replace them. But the more you start adding to those fives, it gets harder to manage. So I would say that's the only thing. So once you have those stocks that you believe in, invest in those consistently. And then the next step would be dollar cost averaging. When you start making those deposits into your brokerage account automatic, whenever you have that amount and you see there's a buying opportunity, buy those stocks, even though they're not at the price you bought them at. I mean, typically they shouldn't because you want them to increase over time, but you also want to increase your percentages in these assets. Dollar cost averaging is really how you increase your positions in that. And that's what you want to do consistently over time. Before you know it, you have multiple stocks of this one asset, and that's the goal over time. And after that is really just continuous learning. From you already invested in stocks. Now what other stocks do I want to invest in? Is this a good asset to keep my money in long term? Are there better options? That's really what you want to do and iterate that continuously over time.
I like how you said to keep it down. I think you said two stocks, two ETFs, three stocks, because
Yep. Yep.
A lot of people want to get into stocks or investing and they want to just jump in and buy everything they see online or what they hear people talk about. But in reality, it's hard to manage an
It
investment
is. It
portfolio,
is.
like keeping up with all the stock. Okay, let me say it's hard, but it's work. And the more
It
stocks
is
you have in
work.
your portfolio, the more work you have to do. So keeping it to a number that you can manage, that you can follow with these stocks is imperative in the beginning so that you're not just investing in something and not taking care of it. If you went to the
Mhm.
bank today that where you keep your money and you ask them, what is your guys' plan for how you manage this money? Or how do you guys make sure that this money stays intact or that you make money? And they said, I don't know. You would take your money out of that bank. So same thing with the stock market. Don't just buy stocks without a reason. Buy stocks that you think will increase in value over time. So at this point, our investor has learned how to invest, what they can invest in, when they should invest. If you're going to give yourself, if you would give one major thing you learned or something that has always stuck with you throughout your investing journey, what would it be?
I'll say it's continuous learning because I know a lot of this can seem intimidating at first, like looking at charts, understanding what a PE ratio is, understanding what an earnings report is, knowing when to buy, when to sell. A lot of these can seem intimidating. I know to me it was intimidating at first, but like anything in life, the more you do it, the more you immerse yourself into it, it gets easier. I like to use the gym analogy because obviously I'm a gym bro, but I feel like it applies the same way. Like obviously when I started out working out years ago, I was not the way I look today, but I had a goal in mind and I set a plan because this is how I want to look. I want to feel better. I want to be stronger. And the more work I put into going to the gym, the more I saw the results. And the same applies to the stock market. Yeah, you're not going to know everything starting off, but the more you take the time to learn, the more is that you take the time to like listen to podcasts like this. You listen, you read books, you look at charts, you have conversation with people that are knowledgeable. You see that you over time, you're not where you started. You're a lot further than you think. You are better. You understand what you should be doing in the market. And that's where you want to be. You want to be continuously learning and getting better and improving your skill. I'll say that's the most like my key principle when it comes to this. How about yourself? What do you think? What would you say your key principle is?
I do like the continuous learning.
Mm-hmm.
My key principle would be to know yourself, understand yourself. One thing about investing is that like investing will take advantage of your emotions. And if your psychology is not together, like if you don't have a good
Mm,
mindset
that
on how you're
that's very
investing or how you're
true.
trading, it'll
Yeah.
take advantage of these things. So like understanding yourself, knowing the type of person you are will help you a lot in the stock market. So
Yeah.
good example. I'm not a patient person. And it took for me to become an investor or trading or to be losing at trading for me to understand when I'm reviewing my trades as like, why is this trade not going through? Why am I not making money here? Why am I losing money here? It's because I'm
Mm,
seeing that I either entered the trade too early because I didn't wait for my entry, or I exited the trade too early because I wasn't patient enough to let the trade follow through. So mine would be to know yourself. If you know yourself, or if you're able to look yourself in the mirror and understand the person you are, it'll help you a lot in your trading journey, because when you're failing early, you'll know why you're failing early and you'll be able to address it.
no, 100%. I think the same way psychology applies to our everyday life, that's just amplified in the market. Like the same way you
Hmm.
react or are affected by things in life, you're going to be reacted by those things. Like you see your portfolio drop 100%. Your psychology is really what determines how you're going to react to that. Like, are you going to lose it? Are you
Yeah.
going to like just give up? Are you going to try and figure out how you can bounce back? Like, it really just comes to know yourself. So that was a good point for sure.
Everybody has a different feeling when their account is red. We all,
For sure. For
nobody
sure.
has a good feeling. Nobody has a good feeling, but
Mhm.
we all react to it differently. Some people can stomach a 20% loss. Some people will feel like it's the end of the world with a 20% loss. So we all feel differently about it based on
Mhm.
the individuals we are.
Okay. No, I agree. All right. Let's say I want to throw something out to you. Let's say we had a time machine where we can go back to when we've just first started investing. What are some things you would tell yourself?
Before I answer, if we ever got a time machine, I think we can agree that it would be built by Elon.
Yeah, it's gonna be Elon for sure. For sure.
If there was ever a time machine built, It would be Elon Musk.
It's definitely Elon. I don't see tech companies doing that right
I
now.
almost said Jensen Wang. I think
I mean,
he
they will have. I
specializes.
feel like they will have some part in it. Like obviously, they're going
Yeah,
to provide the chips and the GPUs that will be needed to
yeah.
build
But the
this
idea and the
product.
execution would definitely
On
be
the
Elon
execution, is definitely Elon for sure.
for sure. You wanted to make sure. All right.
We on it.
So
We right there. We right there.
you know what the girls do.
I can't. All right, let's come back. Let's come back.
what I what I tell my younger self. So if I
Mhm.
could tell my younger self anything, it would be to continuously learn. So like your key principle. So I hope someone else is hearing that and they're implementing that. So it would be to
Mhm.
continuously learn. I think if I had continuously learned from the day I discovered the market up until where I am now, I'd be 4 times as far as I am. But I guess the real one for me would be patience, like just teaching my younger
Mhm.
self to be patient. Like you have to be patient in the market. It's a patient man's game and compounding takes time. So like in order for your money to grow, it needs time to grow over a
When it's
period. It
time.
needs time to compound and accumulate over a period of time. It's not going to happen overnight. So those mine would really be patience, but I'd say make sure you're continuously learning. What would you tell little Umar?
Relax. Patience is definitely a good one for sure. I mean, what I'll tell myself, bro, just hold for the long term. I think that was something I'll tell myself. Like for context, I was looking at my Robinhood the other day. The first time I bought Bitcoin was in 2018. I think it was around like 5,000 or something like that. Imagine if over that time I've sold, bought again, sold, bought again. So imagine if I never touched that Bitcoin and just kept dollar cost averaging. Imagine where that is. Bitcoin is over 100K today. So imagine if someone said, okay, if you put 5K into something and in the next year, in the next couple of years, I'll give you 100K. Obviously, you're taking that. So I'll say like
You're taking
that,
it.
and I think that just goes back to our initial conversation of this is a long term. Like, yeah, I sold for some profit, but it's not the profit I would have seen if I held for the long term. I think that's what it is. I think one thing about investing is that knowing that this is money you're putting away and not necessarily looking to use in the near term. Like you're just putting this money away and hoping for it to grow over time. But yeah, that's the first one I'll tell myself, hold for the long term. The next one is automate your investing. I think this is one I beat myself over for nonstop because if I had made my investing autonomous from the jump, made it more seamless, I would have had so much more money in my brokerage account. I think the how I used to invest early on was where I just felt whenever I felt like putting money into my brokerage, I just did it. But with that is that you're not making your investing consistent. And with that, you're not going to have as much money in that brokerage to invest in other things and assets that you want. And another thing is that money is going to get spent regardless. Like I can't tell you what I did with that money I didn't put in my brokerage account because life happens. Like you're going to spend that money regardless. But like you said, if you treat it as a bill where you're always putting money into your brokerage account, you're going to see, even if you're not investing, you're going to see that the capital you have to invest is growing over time. And that's really what you want to do. So whenever you're ready to buy a particular asset, you have the capital available to do it. But I'll say those are my two main ones. Like hold for the long term and then automate your investing as soon as you can.
How much richer would you be if you went back and told yourself those two things? How much richer would you be than you are right now?
I don't want to put a number to it, but the portfolio would definitely be in six figures, not gonna lie. It would be in six
Like,
figures.
would it be like I don't know, like 5 times, 20 times, 4 times?
I mean, with the power of compounding, it would definitely be like 10, 20 times for sure.
Okay, yeah, I think I'd be right around there.
So yeah, I mean, and that's why
Who knows? Maybe
we're
100 times.
who know exactly who knows. I mean, what's the rate of the return of Bitcoin? Bitcoin is like
Bitcoin, you said
20x. I mean,
yeah,
at
no,
least
that's not
20x. So
20x.
yeah,
That's 20 times. Yeah, 20 times. I'm
yeah,
thinking 100.
20x. So just imagine. So yeah, that's over 100%. Like you're
Yeah,
talking about 1,000% now.
1000%. That's literally, yeah. That's what is it? 1900% because 100% 19 times.
And that's why we're here today. So these are things that we've learned from experiences, and we know that like we had implemented this early on, we would have seen so much better return. And so that's why we feel like it's our duty to kind of share this information to people.
Let's get into our segment now where I'll give you a scenario and you tell me if it's making sense or not.
If it makes sense or not, cool.
Yeah. So first one is investing in a company the day before its earnings because you have a gut feeling that it's gonna blow earnings right out the waters. I went in and bought options, or I bought like 100 shares at 2:50 p.m. and they're about to report at 3 o'clock because I know
At
they're
3
about to
o'clock.
kill it. Is it making sense or not?
Let me be honest, I have done this before, but it doesn't make sense. It doesn't
We've
make
all
sense
done it.
because
We've all done it. It's just gambling.
exactly, that's what I was about to say. Because honestly, what's happening is that you are gambling on the earnings report. It can either be a good earnings report or it can be a bad one. And even if it's a good earnings report, we've seen scenarios where that doesn't really translate to the stock price, where the stock price either stayed constant, it didn't move, like it had no effect on the stock price. So just because they had a good earnings report doesn't always show with the stock price.
Yep.
Yeah, if you were just buying it just because off of the earnings report and not necessarily because you believe in the company, I would say that is pretty much gambling and it does not make sense.
Yep. I agree.
How do you feel about
It's like
that?
you said, we've all been there. We've all done it. We've all
Mhm,
been there. But the honest truth about it is it's just gambling.
mhm. All right, I have one for you.
All right.
You saw this
Okay.
video on TikTok. You saw this video on TikTok talking about some meme coin and some stocks that you can invest in. Are you investing in those stocks because you've seen those videos, or how do you feel about that?
Repeat after me. I will not be someone else's liquidity because that's exactly what that is. When someone is on social media promoting a stock or whatever, and they got a little bit too much energy about the stock, they're probably heavily invested. So if they're heavily
Mhm.
invested, they're trying to get people to put money into it. All of us are going to put our money into it. When the thing goes up, that person's going to take their money out. And now we're left the stock dropping and our asset losing value. So like, no, it does not make sense. Before I invest in anything, especially if I got it offline, I'm going to want to do my own research
Do
because
your own
I need
research,
to
exactly.
understand the company and have my own thoughts on the company, not just because someone told me it's going to the moon and I'm just invested in it. So no, it's not making sense.
Yeah, I agree. That doesn't make sense for sure. I think if you ever see some type of recommendation online, you should always do your own due diligence in terms of looking to see if it is a good investment or not. So what I like to do, I mean, I do follow some financial people like on Twitter or on Instagram, and they do talk about certain stocks. Whenever I see that, I just use that as an opportunity to kind of filter down my watch list or even add them to my watch list. And then from there, I can do my own research to see if these are good assets for me to invest in or not. But yeah, I agree. It doesn't make sense. Don't do it.
One of my first college professors, it's crazy that he said this, and it's like he said this to me like over 10 years ago. But he said Twitter is the news for stupid people and Instagram is the news for stupid people that can't read. And that's kind of the world we live in right now.
I mean, that's pretty much
It's not
it. I
the
mean,
stupid people aspect of it, but that's how people get their news now.
that's how people get their information. Like people don't really
Yeah,
read like
for real.
news articles anymore. It's just like, oh, I saw this on Twitter. I saw this on
Yeah,
Instagram. But that's
yeah,
true. That's
facts.
true.
Don't get me wrong. I'm one of the stupid people
The stupid
because I don't
people.
have Twitter. I just got Instagram. I don't even got Twitter, so I'm one of the stupid people that can't read. Yeah.
Um,
I just thought about that when you said Twitter and Instagram, though.
no, that's
I got
valid.
another
That's valid.
scenario for you, though.
Okay.
So I just heard about this one crypto, and the crypto has been going crazy. It's at 50 cents, but on January 1st, it was at 1 cent. So it's gone
Mm,
from 1 cent to 50 cent over the past 11 months. And I heard it's supposed to be going to $1 soon. So I took my savings and I put my savings into this X coin.
okay.
Is it making sense or
Oh,
not?
you had me when you had it at 50 cents going to $1, but then when you say you put your savings into it, all right.
My whole savings.
Your whole savings, yeah, it doesn't make sense. Doesn't make sense. I think we talked about this earlier, where I was like, I as an investor, especially with crypto, you only want to put 10% of your portfolio in risky assets. And so putting all of your savings into something that's spectacle like that, like a crypto coin, that doesn't make sense. If it's an investment where you just want to take a chance on it, definitely uh, use capital that you use capital that you don't mind losing. That's what I recommend when it comes to crypto. But putting your life savings, that does not make sense. Don't do it.
Yep, I agree. As an investor, your number one priority is capital preservation because you have to live to
Hmm.
fight another day. So
True.
if there's ever an investment that you're making and it can literally ruin you, like if you put your life savings in this and it is a possibility that this thing goes to zero and you will have no more money, you shouldn't do it.
Don't do it. Don't do it. 100%. 100%. All right. Okay. One last one. Last one. You're just starting to invest and you decide to start with only ETFs. Does that make sense or doesn't make sense?
That makes all the sense in the world. It's making all the sense. It's making dollars. It's making pounds. It's making sense. I wish I started investing this way. Like I didn't really
Hmm.
know much about ETFs when I started investing. So I did not start this way, but I wish I had started this way because you will build a wonderful foundation in your
In your
portfolio
portfolio. Yeah.
just by
Very true.
investing in ETFs over a period of time. And they're bound to grow. And by the time that you do this for like a year, you have a solid foundation that like, because even the little volatility you'll get it never do you too crazy, like compared to that of a stock or crypto.
Hmm.
It's making all the
No,
sense in the
yeah.
world.
Yeah, I agree. That makes total sense. Like we said, like ETFs are a great first asset to buy when you just start off investing because you protect yourself from that volatility that comes with buying individual stocks. And you see that even though is you don't see a significant drastic growth over time similar to stocks, you do see consistent growth. So take for example the S&P 500. This is basically betting investing in the top 500 companies of the US economy. So you're pretty much betting on the US economy. And for the past couple of years, we've seen the S&P 500 grow consistently over time. So if you started with this, you would definitely see your money growing. And that's one of the things you recommend as a beginner investor. Because if you start investing and you're losing money, obviously you're going to get discouraged and you're not going to want to do it. So if you want something that's going to encourage you to continue this journey, yes, are definitely the way to go.
Yep. It was making sense.
Making a lot of sense. A lot of sense. All right. So what do we have? What do we have coming up in the market this week? I know the past week we had a lot of all the Magnificent Seven report their earnings. So we had Meta, we had Microsoft, Apple. So there's a lot of turbulence in the market. But is there anything you're looking forward to, or um, yeah, pretty much, are you looking forward to anything coming up?
I gotta check my calendar again. I know Robinhood had their earnings today. I mean, the majority of the bigger companies already happened last week. So we had our Meta, we
Mm,
had our Microsoft, Apple, all of them. And then I think later in the month is when we get some of the other ones. So as far as like earnings, I mean, this hasn't been a great earnings season. The market's been a little shaky, like you said, been ups and downs. I think what is going on right now is like a lot of the AI spending is being considered in these companies' revenue. So we're seeing that like companies are spending a lot on AI and it's affecting the money the returns that they're making. Granted, AI investments are a long-term thing. So they're biting the bullet for that right now and it's affecting their earnings. So you just got to keep an eye on AI expenditure for the next quarter or two or maybe year as these companies are reporting their earnings.
I agree with you. I think um, one thing that we know is that AI is here to stay, but I think one thing that companies are struggling with is how they implement it into their infrastructure because obviously it does cost a lot. Seems like they like to make it seem like AI is not expensive, but it is extremely expensive to have
Super
the compute
expensive.
power to do all of these things that you want the AI to do. So just having that.
Available at all times.
Exactly, exactly. So these are things that companies are starting to figure out, especially with their earnings report, where you see AI spending has gone up tremendously. But I mean, yeah, like you said, there has been a lot of turbulence in the market. So on my part, it's really just trying to see where the dust settles, and then because we are seeing some type of pullback, so trying to see where the dust settles, and then where the stocks that I have, if they reach those price targets that I have in mind, and then see that as an opportunity to buy for sure.
Yep. I agree. Yes. Like you said, you just got to see where the dust settles. It's been a little volatile, a little turbulent of recent. So we just watching and seeing for now.
But yeah, I think that's all we had today. You have any closing words for the people?
If you're a fan of what's going on here, if you would like to join our community, if you would like to follow our journey, or if you found value in what the content we're bringing, to our different platforms. Give us a like, comment, subscribe, follow us on social platforms, and comment below what your key principle in the market is. I know Umar mentioned his, I mentioned mine. We'd like to know what are some of you guys' key principles or moment in the market, lesson that you learned in the market that has stuck with you throughout your journey. And thank you for joining us here for episode 2.
No, yeah, that's a good one. I'll definitely want to see what people say their key principles are. But with that, thank you for listening to Common Sense, where we're all here trying to make sense of our sense. Thank you.
Till next time.
Peace.